So I will answer your questions for Lalu. All right, so I think we're going to start our webinar right now. So before it starts, here's just a small risk disclaimer for you guys. The information provided in this webinar is for educational purpose only and should not be considered as financial advice. Content presented in this webinar is based on the information believed to be reliable, but no guarantee is made as to its accuracy or completeness. Pupil and I shall not be held liable for any losses, damages, or expenses incurred as a result of the use of the information provided. Trading and investing in financial markets involve a high level of risk, and it is possible to lose all of your invested capital. Before making any investment decisions, it is important to carefully consider your financial situations, investment objective, and risk tolerance. All tradings and investment decisions are solely based on your own responsibility. So just a quick risk disclaimer. Now we are going to start our webinar right now. In today's topic, we are going to discuss about 2024 market recap with us. So give you guys a memories on what's happened, what's going on in 2024 and what to expect in 2025. And we can also try to link some of the big fundamental in 2024 and explain on the ongoing trend. So for example, regarding on the war issue, how will it affect the safe haven assets such as the gold as well as the oil market? So we can base on historical experience in 2024 that we have been learned, and we can try to apply in 2025 trading, because those fundamentals normally sometimes will be similar. So we can try to apply it in 2024 if the things really going to happen. So this is why we want to hold a webinar regarding on 2024 market recap. We hope bringing you some of the memory, the market, and try to enhance your trading knowledge and try to link what happens, what is the fundamental things that happens in 2024 that affect several asset classes aggressively. Okay, so this is the key highlights that we are going to cover later today. The first one is actually regarding on the geopolitical impact in 2024. As you understand that in 2024, there are a lot of things that actually happens in the market. So the first one is regarding on Hamas and Israel war. The second one is regarding on the Russian and Ukraine. And then we also understand that in 2024, we also do have the US elections, which trigger a significant market volatilities. So later we'll update it later. And then we will also give you a very, very quick brief about the overall US economics outlook, the global economics outlook, but specifically we also explain why, as comparison in 2024, why is the dollar trends super good, and why is the dollar recently continue to increase further. Why investors are only interested in dollar but not other currencies such as GBP USD, EUR USD in 2024. So this is something that we will also explain it later. We try to compare the economics performance between US, UK, as well as Europe. So after we showing all of these economics data as well as the charts, you guys will have a very, very quick understanding on why dollar continue to be strengthened in 2024 and what will be expect in 2025, which means this year. And then we also let you guys have a quick understanding about what is the sector and trending things is in 2025. So for example, the most famous thing is regarding on Trump's finally become the US president. So what policy is he going to launch in 2025, and how will he affect the asset classes movement, such as dollar prices, the gold movement, and specifically the cryptocurrency is also something that we will talk about after the US elections, what's next in 2025. Okay, and then we will try to combine the reason, fundamental, and technical analysis, trying to use a longer term chart to analyzing the market. So for example, we might be using weekly charts and daily charts to analyze the longer trends in the markets and see whether it will still remain solid to our push or not. So this is our quick highlights for today. So now first thing we are going to cover is regarding on the geopolitical impact. We understand that a lot of geopolitical issues happens in the market, but most of this issue, right, normally will only affect asset classes, commodity asset classes, such as the gold market as well as the oil. So let's look back what's happened in 2025 between the first thing is regarding on Hamas and Israel. So we understanding that actually in 2023 October, Hamas and Israel is actually having a war, and intentions continue to intensify until 31st May. The ceasefire proposal have been draft, but it just draft. It still haven't have a very detail of the negotiations. It just proposal has been draft in 31st May, but tensions remain very intensified. But what you understand from that is we can notice that US, Egypt, and Qatar, these few major region, is actually trying their best to make sure Hamas and Israel is actually achieved in a ceasefire deal. And finally, 19 January in 2025, this ceasefire deal already successfully signed. And then we can also notice that both Hamas and Israel already start to release hostage, and then the tensions between both countries had been finally eased out. That time we were also trying to give you a brief explanation on how will it affect on several asset classes movement, specifically for the gold market. So it's not just Hamas and Israel war, but the good news is finally in 2025, they already ceasefire. We hope that things is not going to happen in future again. But we still have another ongoing war, which is between Russia and Ukraine. So Russia and Ukraine war starting at February 2023. Conflicts begins when Russia invade Ukraine, and this caused a chaos in the global markets. So I remember during that time when the war was announced, you can notice that the biggest movement after this war should be maintained on the oil. Oil actually increased sharply. Later, we can notice that the gold as a safe haven asset is also increased sharply. So in 2023 and 2024, even though a lot of party asking them to ceasefire, achieve any agreement, but the tension still remain. The negotiations still fail to achieve on it. So we understanding that currently Ukraine and Russian war continue to remain serious, but some of the market participants already digested to it. That's why in 2024, the whole year, the Russia and Ukraine war things do not impact the market aggressively, but it actually provide a slight fundamental support for the asset classes such as the gold market as a safe haven. And until now, 19 January 2025, both parties still haven't experienced any ceasefire outlook yet. So now to explain the layman's term, Hamas and Israel thing is very good, already ceasefire. And then, but Russia and Ukraine's currently the conflict still remain. So this is something that's going to provide some of the impacts towards gold. So we have been mentioned that this kind of war is going to cause the gold prices to be going up. Here is a short explanations on why. So in a future basis, right, you will able to be understanding like when there is a tensions, especially geopolitical tensions happens in the markets, what can you consider to trade? So the first thing is the gold market, especially gold. You can notice that why gold is remain resilient is because you can imagine gold as a safe haven asset. So when there is a uncertainty in the market, the geopolitical uncertainty in the markets, investor will likely to invest in the gold market, because when there is an uncertainty in the market, currency value will drop along with the equity markets. So gold is something that worth for us to be focused during high geopolitical tension. So 2024, we already experienced it, and 2025, maybe if things still become worse again, then it should be beneficial for the gold market. So we can notice that since the war between Hamas and Israel, along with the Russians, the overall trends for the gold is actually continue to increase sharply. Moving forward, but of course, the tension issue is not the full fundamental to support gold price to be going up. We also have another things, which is regarding on the Federal Reserve might be considered cutting interest rate. So this is also something that can beneficial for the gold. But in 2024, the biggest push for the gold market should be maintained on the geopolitical tensions between most of the country. So this already explain why gold remain resilient in 2024. And then it's not just gold will be affected. And if we are going to look through the crude oil, so normally if there is a geopolitical tension, specifically if geopolitical tension happens in the Middle East, it will normally affect the oil supply, or investor might be afraid that this kind of war is going to cause the oil supply decline sharply. So lower oil supply will normally, oil supply disruptions will also happen. Lower supply will normally support the oil prices to be going up. So normally geopolitical tensions, especially when Russian and Ukraine announced the war, the oil prices initially is actually increased sharply. Why? Because Russian can be also considered one of the major oil exporter around the world. So if Russia will normally supply oil, if there is a supply disruption in Russia due to the war issue, supply will be decreased, which can be supports the prices. So since this ceasefire deal still haven't achieved between Russia and Ukraine, this is something that worth for you to be continue monitoring on it to see whether the tensions will be stopped. So if the tensions still remain and even become worse in 2025, then supply disruptions will be happens on Russia, and this is something can be pushing the oil prices to be going up. So in 2025, if you have time, you can try to understand the news regarding on Russian and Ukraine issues. So if the issue is still unsolvable, then crude oil is one of your considerations. Instead of just gold, you can also focus on the crude oil. And then citing that this war issue might be prompting sovereign countries, especially Euro, US, to implement sanctions targets on Russia. So sanctions, if sanctions is really going to implement, right, Russians, when they want to export oil to others world countries, they need to pay extra tax. So it actually discourage a lot of countries to enter the oil business and supply oil and export oil towards others country. So lower oil supply will same thing will also support the oil prices to be going up further. So this is something worth for you to be focused. It's not just a war issue. You also need to understand that whether US and several EU big countries is going to implement sanctions on the oil. So this, I hope that this important geopolitical events you already have a brief understanding on it. And now we are going to understand on the global economics outlook. Because if you make a comparison, you can notice that dollar really very good in 2024 compared to other asset classes like the pound sterling dropped aggressively, the euro also dropped aggressively. The overall reason why dollar remain resilient, I try to compare a few important data. So in order for us to understand which country as for now is best performing, to simplify it, we will try to compare this country economic performance by data. So I already specifically focus on two important data. The first one is regarding on the GDP growth. The second one is the jobs performance data, which is the unemployment rates. So unemployment rate is people who are unemployed is very bad for the country's overall economy. So if you notice on the overall comparison, right, I also try to catch three countries like US, UK, and Euro. You can notice that if you are going to look through the overall economic performance, right, especially the job sectors, right, Euro is actually the worst because Euro have more than 6% of the unemployment as comparison with US, which is the lowest. Everyone is talking about US economy is not good, US economy is not good. But if you look through the charts, the global economy might be not as good as expected, but as comparison, US consider outperforming compared to several regions. So unemployment, the data, the lower, the better. Yeah. So you can notice that this US having the lowest unemployment rates compared with UK, the green color, as well as the red color Euro. So from job perspective, we already understand that the US have a stronger job market. And then now, with a good job support, now we try to understand how rich are them. So GDP is one thing that can measure whether one country, their economic growth is good or bad, whether the country is very rich or experiencing some poorness. So as comparison, we can also notice that even though the GDP growth in this several country, right, they already start to decline slightly because now I think economies already start to slow down slightly. That's why several central bank might decide to decrease the interest rate, but not important. But if you look through the charts between comparison between the United States, United Kingdom, and Euro, you can notice that as a comparison, US economy still perform the best compared to other countries such as Euro and UK. So no matter if you are going to look through the jobs market as well as the overall economic performance, US still remain resilient. So it's already give you guys a quick explanations on this. So a quick explanation is as comparison, the overall US economy still remain resilient. It have a very, very strong growth, healthy jobs market, and recession is normally unlikely. And if you are going to compare with the interest rate differential, so for new joiner, I will have a brief explanation on interest rate and how will it affect the currency movement. So in interest rates, you can imagine as two things. First thing is regarding, you can imagine interest rate as a borrowing cost, and you can also imagine interest rate as a deposit rate. So you can think it as a two-way, and then you can try to link with the currency. How interest rate link towards currency is you need to understand the deposit rate first, because interest rates might equals to the deposit rate. Higher interest rates means that your deposit rate will be also higher. So if you guys remember, if you save money in the bank, right? So for example, if imagine JP Morgan provide 2 to 3% of the interest rate, or maybe 3% of the interest rate. So if I'm going to save with $1,000 in JP Morgan, I will actually receive $30 of the returns, because the bank is going to pay me as a risk-free return, the interest rates return, the deposit rates. So as comparison, if you are going to, I'm going to look through, for example, from Singapore Bank, the Singapore Bank is actually offering me, I think, 10% of the interest, which means that if I'm going to save $10, $1,000 in the Singapore, the Bank of Singapore is actually going to give me $100 as a risk-free return as well as the deposit rate. So imagine you are investor maybe from Thailand. You want to pick what is the best country for you to save money. Of course, you are going to pick the countries that offer you the highest interest rates, right? So maybe you can consider Singapore, because it's going to give you 10% of the interest rate, which means that you save money in Singapore, $1,000, you receive 100. But you save money in JP Morgan, just for example, you save $1,000, if JP Morgan provide you 2 to 3% of the interest rates, maybe you will just getting, I think, $20 to $30. So of course you will seek for the highest return. Explain the layman's term, higher interest rate will normally attract people to save money in that country's bank. So imagine if you are from Thailand, you want to save money in Singapore, of course, you need to convert Thai bahts, right, into the Sing dollar for you to save it in the Singapore. So demand for Sing dollar will increase due to higher interest rates, more people to save it, and of course, the prices will be also increased. So this is how it's linked. So normally, as comparison in the layman's term, higher interest rate will normally cause the currency become higher. So as a comparison between US interest rates with other central bank from European Central Bank, Bank of England, and also Bank of Japan, US as for now is actually offering consider a highest interest rates with others, this major country. And that's why interest differential is also something that cause the dollar to be continue going up. It's not just economy is good, but interest rate environment is also very, very good. Okay, so now we are going to look through the 2024 interest rates, Federal Reserve interest rate. So you can notice that the Fed is actually decided to continue cutting the interest rate aggressively in 2024. Why they want to cut the interest rates in 2024? I explained in the layman's term. Remember, just now I explained interest rates, you can think it as a borrowing cost as well as the deposit rate. So imagine if the economy performing good, inflation is very, very high. The central bank might want to control the inflation by increasing the interest rates. So how increasing the interest rate will actually control the inflation means that inflation means that the price of goods sold continue to rise. It's very, very bad for people. They want to buy some, the cost of living will be also increased due to inflation. That's why the central bank need to control it. How are they going to control it? Is by increasing the interest rates. So how increasing interest rate will cause the inflation drop, or in the layman's term, how increased interest rates will cause the price of goods that you want to buy, the price will be dropped. So you can think it as two ways. First is higher interest rates will increase the deposit rate, right, as I mentioned just now. So people will likely to save money in the bank more. They spend lesser money. So when they spend lesser money, nobody is going to buy several products in the market. The price for this product will be dropped, so inflation will be dropped. And if higher interest rates, borrowing costs will be also higher. So imagine you want to purchase houses, purchase a car, you want to apply loan. if the interest rate is very, very high, you need to pay a lot of cost of borrowing. So if it actually discourage you to change your car, change your house in a short-term basis with the high interest rate environment, so you are not going to spend your money. Same thing, when you are not going to spend your money, the price of those goods will be also dropping because no more demand and inflation will be stabilized. This is what Federal Reserve do in 2023 after the COVID-19. The overall economy is very, very hot because they launched tons of the stimulus plan in order to boost back the economy. So US inflation have been reaching around more than 10% previously. More than 10% means that maybe your salary increment is 3%, 3%, but the things, the foods you want to purchase, everything increased by 10%, you will be suffering if your salary just increased by 3%. Can imagine as a GDP. So GDP means your salary. So if GDP only increased 3%, inflation increased 10%, everyone is going to suffer. Everything become very, very expensive and not able to catch up with your salary increment. So this is a very, very huge issue in 2023. And that's why central bank decide to shift their monetary policy to increase back the interest rates, to slow down the market hotness. So to discourage people to spend money, that's why it can cause the prices to drop further, discourage people to expand their business due to higher borrowing costs. That's why when their business grows slower, the price will be also become lesser. So this is the target from central bank in 2023. But afterwards, after they increase the cycle of the interest rates aggressively, the overall economy already start to slow down. So if you look through the China overall economy, after the monetary policy decision change, you can notice on China property crisis when they increase the interest rates too aggressively. China, as for now, the property crisis happens, and then you can also notice that US actually experienced tons of the crisis during the earlier 2023 also. So afterwards, they want to boost back the economy, and how they're going to boost back? So they are going to cut the interest rate. So after they stabilize the inflation in 2023, which causing dollar continue going up, and then afterwards in 2024, they decide to cut it, the interest rate, in order to boost back the economy. So the big trend in 2024 is actually cutting interest rate. And when they cut the interest rates, you link towards the currency market, right? You can actually cause the gold price going up one. So you might be understand that why they cutting interest rates, dollar do not drop aggressively, because you need to make a comparison. So imagine if UK and EU cut interest rates by maybe 75 basis point in the whole year of 2024, but US only cut 25 basis point. So US still win the market because US have a highest interest rate. So even though they cut the interest rates, but dollar do not negatively affected because most of the central bank are cutting it. Then we can link to others currency. So when they cut the interest rate, it's not just currency that you're able to short selling. You maybe also consider asset classes such as the gold market. So when they cut interest rate, you can also notice that the gold price is also another support from this huge fundamental. I will explain in a layman's term why gold price will be beneficial from cutting interest rates. Okay, so imagine previously when you save money in the bank is going to provide you 10% of the interest. So if you save money in the bank, also means that you are buying safe haven asset, right? Because there are no risks for you to save money in bank. The risk for the banks to default is very, very minimal. So if bank promise you to pay you 10% per year, you save $1,000, bank will definitely pay you with $100 per year. So no risk. So imagine now, as for now, right? Previously, bank will offer you 10%, but now bank only offer you 1%, a huge difference. You save $1,000 in the bank maybe only pay you by 10. So some of you might think it's very, very bad because it needs a long time for you to save in the bank and the return is very, very minimal. That's why you are trying to seek for another safe haven asset. So this is why gold remain resilient in 2024, because when the approach for people to save money in the bank, the already discouraged, nobody want to save anymore due to a very, very less deposit rate, they will seek for another opportunity as a safe haven if they don't love risk. So gold remains resilient because investors try to shift their money from bank investment from safe haven assets from bank and shift this capital into the gold. So this is one thing that pushed the gold price continue going up. And it's not just Federal Reserve is actually considered to cutting interest rate. You need to understand. And you can also notice that central bank, including from Bank of Japan, European Central Bank, Bank of England, this major central bank is also do the same thing. So no matter you save money in US, save money in Euro, save money in UK, your return is very, very minimal. Your risk return is very, very minimal. Then of course, it will trigger, it's not just US investor, it will trigger several global investor to shift their portfolio from bank to others more nicer asset classes, nicer safe haven asset classes. So gold price remain resilient. In 2025, whether gold price will continue extend its gain or not is also highly depends on the interest rates. So if the US Federal Reserve continue to cut interest rates aggressively in 2025, along with other central bank, including from ECB, Bank of England, then gold should be also beneficial from it. So big things that you need to be understand is interest rates is also another huge thing. You need to try to understand how interest rate will affect several asset classes. So it's not just gold continue going up due to lower interest rates. The US equity market also beneficial from it. So you understand in 2024, everyone are cutting interest rates, right? So if we are going to look through the charts, you can notice the Dow Jones and maybe Nasdaq. Dow Jones, for example, one of a very, very famous US stock index in the United States. When you invest in Dow Jones or when you buy Dow Jones, means that you successfully purchase 30 biggest company in the United States. So it will reflect the overall market sentiment towards the US. So with the expectations that the central bank should be continue cutting the interest rate in 2024, you can notice that the trends for the Dow Jones is actually increased aggressively, and it might be increased further due to the Trump election. Later, I will also talk about it later. But due to this big fundamental, just one thing, interest rates is going to affect multiple asset classes. So please, in 2025, if you want to a quicker, easier for you to understand the market, interest rates, this theory, you must be understanding on it. So in the layman's term, higher interest rates, currency will going up, lower interest rates, currency will be dropping. Lower interest rates will normally support gold price going up because they will discourage people to save money from in the bank with a lower deposit rate. That's why they find other substitutions such as the gold. And lower interest rate will also support the US equity market going up too. Why? Explain in here. Two ways. So imagine if you are a company, a high technology company such as Tesla, Apple, Google, you need a lot of innovations. Innovation means that you need a lot of money to invest in research and development that sector. Okay, so when the borrowing cost is very, very low, it's very, very good for you to borrow money from all of these banks in order for you to build your own innovative product. So we encourage you to invest more in research and development this sector, and it also will encourage you to expand your business. So with a low interest rates and more and more business expansions happening due to a very, very low borrowing cost, we're actually benefiting on the overall company performance. So this is the first thing. And in other terms, company cost will also decrease due to lower borrowing costs with a lower interest rate environment. Lower company cost will beneficial on the profits margin. So it will also beneficial on the overall US economics outlook, equity outlook. And this is why US equity market continue to be strengthened. And in future, it will definitely to be strengthened also if the central bank, several central bank, not only just Federal Reserve, central bank from US, from UK, EU, Japan, even Australia, New Zealand, China, if they maintain a low interest rates, then the equity market will be definitely benefiting from it. So this is something that worth for you to be understand in this year, 2025. And of course, low interest rate will actually cause people to take their money out from the bank and invest in higher risk asset. So this is also explain why direct effects why low interest rates will cause this stock index to become higher. So this is the proof on it. 2024 and end of the 2024, Dow Jones continue to increase sharply. And 2024 to 2025, we are not sure, but if the central bank really decide to continue maintain a lower interest rates, then Dow Jones is definitely, it's not just Dow Jones, Nasdaq, Dow Jones, S&P 500, the US equity market will be definitely one of your favorable asset classes. So if you still haven't understand of all of this US equity market, you can please feel free to go and understand it and try to link the interest rate scenario on it. because instead of just focus on 1 to 2 asset classes for you to trade, sometimes it's better for you to explore more and more asset classes. So when things happens, you're able to apply everything lah. So sometimes, for example, crude oil might have some news, and you are not going to focus on the crude oil. Maybe you just focus on, maybe just example, USD, then you might be miss out some of the opportunity. So another example is maybe some news will be beneficial on the Dow Jones, but because you don't touch and you don't know what is Dow Jones, you will be missing the opportunity. Maybe you just focus on crude oil, but sometimes if you want to really further enhance your trading journey, it's better for you to understand multiple asset classes. So I can definitely guarantee you in 2025, Dow Jones, US equity market is one kind of very, very important asset classes that, except from Bitcoin, because it's very, very good also in 2025. But some of you guys might be not interested in high risk investment, then maybe you can consider about the US equity market, like Dow Jones, Nasdaq. And gold also can be considered because of the interest rates outlook. So these asset classes will definitely be affected aggressively. So you need to be understand. Okay, so next one, we want to give you some brief explanation on what sector and what trends in 2025 to be focused. So now we give you a potential update about the US elections first. US election, right, it's actually affects a lot in the markets, especially the cryptocurrency. After the US President Donald Trump win the elections and gives an announcement, crypto finally break record high of 100K. So it's something worth for us to be celebrate also, to be focused on also. So due to the Trump elections. And it's not just the cryptocurrency have been affected. His policy is going to affect a lot of multiple asset classes. So let me summarize up what is he going to do. And this is statement from Trump. And I'm not sure whether he's going to 100% launch all of this policy or not. Maybe if he will, but maybe he will not. But according to his statement, this is kind of the summary on what will he focus in 2025. So the first one is regarding on tariff as well as the trade war. So the risk remain because when he gives some speech, he actually announced that he will launch around 65% of the tariff target on China. So even though it's just statement and still haven't launched yet, it already triggers some of the uncertainty. And then it's not just tariff, and he just announced he's going to tariff on Canada with 25%. So as a trader, you might not understand what is tariff. To explain in the layman's term, tariff is kind of like a tax. So for example, if I want you to suffer, I just impose tax on you. So when you sell me any products, you need to pay me extra, maybe 20%, 25%, 30%. So it will increase your costs. So this will normally increase the company costs due to higher tax. And when higher costs means that inflation will be happening. Because imagine if you are the boss, you purchase a lot of products from China, for example, and since these tariff things, your cost already increased by 25%. So you will be suffering. So how can you reduce the suffering? It's by increasing your selling prices lah. So who will be suffering right now? Consumer will be suffering. So definitely if tariff really going to be implemented, it will cause cost of living to become very, very expensive. Inflation might be continue going up. So in orders, inflation going up, then question is what's next? So you can understand that when inflation is going up, then it can link to interest rates. The Federal Reserve might change their policy and increase the interest rates, and increasing interest rate will actually benefiting on a few things. First one is dollar. And then the second one is actually not beneficial, sorry. Dollar might be going up due to higher interest rates, and then other asset classes such as the gold prices, such as the equity market will be dropped sharply. So this is something that worth for us to focus on. First one is how much tariff they're really going to implement on. The second one is after they implement the tariff, how will the inflation's performance? So high inflations, if Feds increase interest rates, then dollar might be going up and vice versa. Or tariff will also trigger significant uncertainty in the market. Significant uncertainty in the market will actually also supporting the gold price to be going up. So it's something worth for you to focus also if you are a new joiner, because when I think 5 years ago, I've been working during Donald Trump. I've been a trader during Donald Trump period. He's really going to launch a lot of interesting policies. So that is going to trigger a huge market movement. So as a new trader, new joiner, I think in 2025, the most important thing for you to be focused on is Trump policy. It's really going to provide an impactful catalyzed in the market. So it's a big thing. And Trump also going to announce an expansionary fiscal policy, which means that cutting tax. So cutting tax will normally boost the overall US economy, and maybe it will beneficial on the US equity market. And immigration restriction is also the key things Trump is also going to be implement. So if they're really going to implement the immigration restrictions, as a trader, how can you understand from this fundamental? So this immigration policy is going to cause it will actually reduce the labor sources, because people might be working in the US, but due to this thing, no more labor. So of course, people in the US, they might argue for higher salary because now no more workers already. So you have a higher negotiation power. You will argue a higher salary with your bosses. Higher salary, what does it mean? It means that the cost for your bosses will be increased. Your boss will be suffering. As usual, when your boss suffering, what is he going to do? It's going to increase their product selling prices. Then consumer will be suffering, and it leads towards the inflation. So immigration policy, trade war, tariff, these kind of things will definitely directly provide, causing the inflation rate continue going up. And if Feds want to control it, they will definitely increase the interest rates. So if you have a news regarding of increasing interest rates, then maybe dollar is one of your good considerations, and maybe it will be rare on the gold prices. But this thing we definitely still not sure yet, because Donald Trump haven't really implemented. But before we starting 2025, this is really something we hope you guys need to be understand first. If not, you just do some trade and then you're not sure what happens in the markets, what's going on. So even you lose, you are really unhappy on it. But if you understand all the situations, so even when you lose your trades, you're able to learn something. Okay. So Trump also going to launch a lot of crypto-friendlier policy, including pro-crypto regulations. So he will actually ease down the crypto regulations, but just a statement. He haven't launched yet. So we need to stay tuned on it. He will also make sure crypto as a national Bitcoin reserve. Same thing, just a statement. So the Federal Reserve might purchase a lot of Bitcoin according to the rumors, but the detail we are still unsure yet. But all of this statement, right, is actually continue to support Bitcoin to be going up. If you look at the chart, it's really, really interesting. So whether 2025 is really going to increase more and more or not in future, 100% depends on Trump's statement also. So stay tuned on it. All of his statement, no matter his support or not supports the cryptocurrency, definitely is going to create the volatilities. So try to understand how the Trump stands on the Bitcoin currency, the cryptocurrency, and try to strategize on it. So same thing, move to Trump statement is a very, very big thing. And then in 2025, it's not just some asset classes such as stock index, crypto, gold, dollar, you can be focused. AI technology and tech-heavy index is also something very, very important for you to be focused. Because if we understand that the growth for the AI is actually exponentially, it's very, very huge. So definitely AI industry in 2025 will be also very, very famous. So some of the, if you don't want to pick what is the best AI companies, then maybe you can consider NASDAQ. NASDAQ actually include 100 of high technology company inside. Inside do have Google, do have Apple, Amazon, a lot of big company. So you lazy to pick what is the best AI company, or you don't know how to pick, then maybe NASDAQ can be one of your consideration. If NASDAQ, if the artificial intelligence trend is really consistently great, then it might be benefiting on NASDAQ. Okay, so I think this is all our huge updates today. So we hope that we give you have an enjoyable webinar tonight and have a quick updates on what happens and what you do next in the future. So the first thing is regarding on dollar, really interesting going up in 2024 because of this economics performance, US consider the best. Whether US will continue become the best in 2025 or not, we're not sure, but currently it's still on track, it's still positive. So you can look through further economics data to identify the trend. And then gold price remain very, very good because of Russian-Ukraine war still ongoing. Trump policy remain very, very uncertain. We're not sure what Trump is going to do. And then we also noting that Federal Reserve cutting interest rate aggressively also in 2024, which is continuing to support gold price continue going up. And whether 2025 they will continue cutting rate or not highly depends on the economics data. If Fed suddenly change their policy from cutting to increasing, then gold price might be dropping back. So if you ask me whether you want to buy gold right now, short gold right now, really very, very unclear. We need to make sure everything on track. if you want to short gold, right, sell gold, right, then maybe you need to make sure the Fed is really going to change their policy already. They increase the rate already, and then maybe the US economy's performance is very, very good. So then maybe it's a time for you to sell. But if you want to buy gold, also have some huge fundamental, because we are not sure what Trump is going to do. If Trump really implements 65% of tariff on China, how will China tit for tat is also another interesting topic for you to understand. But if China really tit for tat means that if US impose tariff on China, China fight back with a more aggressive tariff, then it will definitely affect and beneficial for the gold prices. So it's something also very, very worth for you to be focused in 2025, the gold trends. And then the oil markets, you can focus on a few things regarding on how serious in Russia and Ukraine war. If the ceasefire deal achieved between Russia and Ukraine, then definitely it will cause oil prices to drop because supply disruptions no longer persist. So it will be cause oil prices to dropping further. So this is also something that worth for you to be focused. And cryptocurrency, I'm not going to give a lot statement about the crypto since most of the trend maybe as for now, it mostly depends on Trump. So I'm not Trump, I'm not sitting beside Trump. So, but according to his previous statement, he's quite a supporter for Bitcoin lah. So in future basis, if really going to implement more and more user-friendlier policy on the big cryptocurrency, then definitely BTC is really a very, very worth focusing asset classes. But as I mentioned, Trump is some guy that will suddenly change their mind. So you can try, but you don't all in all of your capital in just few asset classes. Okay. And then Dow Jones, Nasdaq is something worth for us to be focused also. Dow Jones beneficial from will be benefit from strong US economic performance, lower interest rates environment. And Nasdaq, one of the tech heavy US index, will be beneficial from artificial intelligence trends in 2025. Okay. ETH, please. Actually, ETH similar with the crypto lah, to be honest. They drop back mostly due to technical corrections, but if Trump really support on ETH, right, then cryptocurrency is not just specifically ETH, then it will be also beneficial from the big trend. Now everyone, including, you can notice that even the Bitcoin consolidate because everyone are waiting for Trump's statement. So we don't know when he will give a statement. So yeah, stay tuned on it. If he don't give statement maybe for around 1 to 2 months, right, then no, maybe this cryptocurrency will be also dropping. So it's something that really uncontrollable one. So stay tuned on Trump's statement. All right, now we are going to open for Q&A sessions for around 5 minutes. Any questions that you guys want to ask me? Nevin actually asked go, sell, buy, sell. Oh, I think I already answered your question just now. We do have 2 big fundamental, to be affects the gold prices in 2025. And also, I think I answered your questions. Something really uncontrollable lah, because LTC means one of the coin asset classes. Normally we will focus more on Forex, commodities, maybe, and major asset classes such as Bitcoin and ETH if you need it, or TA to answer easily. Any more questions before we end our sessions tonight? Can you speak more on Trump and Melanie coin candlestick? We are not going to cover it today. Sorry for Brianna. And I can say that this thing is really meme coin and depends on market sentiment. And we can't analyze on this meme coin, to be honest. So if I analyze, for example, a very, very great chart for you to sell, then suddenly Trump, I think during US market open, he suddenly launched a crypto-friendly policy, mostly support on Trump coin, right? Then you will be losing. You will be like suddenly shift. So meme coin is something interesting, so aware on it. But depends on your fate. I mean, SS and UUSD. Okay, so gold price as for now remain resilient, but as for now is testing a resistance level around 27960. Why gold price remain resilient recently is because Trump just announced he will impose tariff on Canada 25%, trigger a significant uncertainty and causing the gold price going up. So to understand whether the gold price will continue extend its gain or not, right, fully focus on this resistance level first, 2760. If really successfully break out, then we can focus until 2790. Why 2790 is the record high in 2024 October. So it's really break above again. Then once gold price really break a record high, then it will be very interesting for it for the gold in the future. So it's something asset classes for you to be focused also for Navin. And our host asked about GBP, JPY. And GJ first lah, we talk about the GJ first. So GJ recently pound sterling rebound back because US do not mention he's going to impose tariff on UK first. So in short-term basis, pound sterling beneficial on it. But you need to aware because in this Friday, we do have the Bank of Japan monetary policy decisions, which is going to trigger a significant movement for the Japanese yen. So we're expecting Bank of Japan will increase the interest rates, which means that Japanese yen might be going up, causing GBP USD to be dropping further if they really provide a very hawkish statement. So the risk remain if you want to focus on GJ because two major things is going on in the market affects on GBP as well as the Japanese yen. So if you want to continue trade it, you don't love risk, then maybe you can consider don't trade on Friday, especially before the Bank of Japan monetary policy decisions. And if you insist want to focus on it, then short-term basis, we can try to focus on the resistance level 192.95. So any breakout there, maybe will suggest it to be going up. If not, we're expecting it might be dropping. A very, very nice resistance level here. So stay tuned on it. And Apple, I think, let me focus on Apple first. Apple, as for now, according to the charts, might not as resilient as focused as expected. Because if you are going to look at the chart, right, it's already break below a huge upward trend line. And currently testing the support level 220.95. You can notice that we have been tested several times before. Test, rebound, test, rebound. Now testing again. Whether it might rebound or not, I doubt that. Because normally if one asset classes break below this long trend line, right, the risk remain of like the overall trend, overall sentiment might be changes. So Apple, even though now is a good entry point due to a strong support level, but it will be the best if you wait until they really successfully break below this strong support level and then you more focus on the short selling positions because it's a double breakout. So have some patience on Apple to answer all his questions. Fundamental fronts, I think you are also Apple user. You should be know how good is Apple in future. But normally they drop due to technical. Okay. And then Brian, you last, I think two more. I think I analyzed USD, CAD, and Bitcoin, then it will be our last. Thank you everyone for your support. These questions. Okay, UK is also something very, very interesting. If you are going to zoom into the H1, right, you can notice that USD CAD increased sharply and afterwards it dropped back. So I explain one by one first. So why USD CAD suddenly go up aggressively is because during these periods, Trump announced he's going to launch a tariff on Canada, 25 basis points. It's just pure statement. So USD CAD going up. Then after this pure statement, no more news anymore. Investors digest it and doubt it. They sell back. So I explained in the layman's terms, when tariffs were implemented, Canada economy will be affected. CAD will drop, USD CAD will be going up because of the formula. But afterwards, investors re-enter back on the Canada markets because they fully digest the news. That's why Canada dollar CAD increase back, USD CAD drop back. So it's a recent fundamental update. So the question line on what's next for the USD CAD, right? So actually we are going, it's better for us to maybe utilize the H4. H4 is very clear. USD CAD as for now, I show you, consolidate in a zone, very, very nice consolidation. So maybe 1.4305 is one of your considered your entry point. Then maybe if they break below here, you should close your positions. So you can depends on it whether you want to try this consolidate trading lah. But in my opinion, normally I don't recommend. It's better for me to break above records, support or resistance, then you only play around it. Because consolidate trade, right? Sometimes they won't consolidate until your TP level, resistance level one, right? Sometimes it will be like that, like consolidate until half, then increase until half, then suddenly drop back. So it's not fun if you play around consolidations lah. But if you want to, according to technical fronts, then maybe I can just let you know 1.4305, a strong support level, 1.4455, another strong resistance level. You can play around this area. And then also take note, we don't know Trump will suddenly launch what's policy to Canada. So this is things that you need to take note lah to answer right now. And Iman Ludin asked about the Bitcoin. Same thing, lor. Bitcoin, actually, you can focus on the record high. Normally, when one asset class spread above record high, right, it will continue to be going up. But as for now, I don't think we're able to analyze the crypto market because you can notice that all of the candlestick is very, very weird. And if you want a very, very clear resistance level, right, it's better for us to just focus on the record. It really break above, then maybe you can take it as a consideration. But there are a lot of time BTC have a fake breakout one. So this is one of the example. Everyone thinks already successfully break out, then afterwards you drop back, consolidate again. So in the layman's term, crypto, especially BTC, not easy for us to be forecast in a short-term basis because everyone depends on Trump's statement. So uncontrollable. What you need to do is, if you're really confident on it, make sure you don't over risk yourself. You can play a small capital around it, and then you can focus on Trump's statement to answer BTC analysis. What indicator you use for support and resistance level? No indicator. I draw all of the support resistance level myself. In future, we'll definitely run a webinar specifically to teach you how to utilize support resistance level candlestick pattern. I think that's all for today. And once again, thank you so much for support. And I think this almost 1 hour, you guys still stay with me. It's really something very, very nice and really truly thank you for all of your support. And if no more questions, we are going to end here. And thank you everyone for your time. Have a good day.